If you're paying rent right now, thinking about buying a home, or listening to someone who says prices always go up, stop, because the last time that sentence was said with confidence, 9 million families lost their homes. So what's a housing bubble? Explained simply, it's when home prices rise far above what they're actually worth. They inflate with hype, greed, and cheap credit, and then they pop. The term became famous after 2008, but the pattern goes back centuries. In the 1800s, railroads sparked land speculation bubbles across America. Every time, they sold us the same story. They convince you prices are going up, so you borrow more and bid higher. Banks say yes to everyone, no hidden fees, no questions asked. Then reality comes knocking, not politely. It kicks the door, wide open. So how does this system work? Imagine you're in a small town. A nice house on a tree-lined street. Price tag, $200,000. Perfectly reasonable. Then a big company moves in and creates jobs. Naturally, this chain reaction starts pushing property prices up too. Prices begin to skyrocket. First, $250,000, then $300,000. This surge pushes you into panic. If I don't buy now, how will I ever afford it? As the housing market sees buying power increasing, prices keep inflating. And banks aren't turning down your loan application either. Investors see the opportunity and dive in, not to live in homes, but to flip them for profit. This is exactly where behavioral economics kicks in. The fear of missing out overrides logic, and then consumer psychology enters the picture. People stop asking, is this really worth it? And start asking, will it be more expensive tomorrow? Here's a shocking fact. In 2006, a strawberry picker in California earning $14,000 a year got approved for a $720,000 mortgage. That's not a typo. That's a system running on pure delusion. The bubble grows as long as new buyers keep coming, but the moment payments can't be made, defaults begin. Sellers flood the market, prices crash. If we sum up economics explained in one sentence, what rises irrationally falls painfully. The biggest example was the housing collapse in the United States in 2008. 9 million families lost their homes. The global economy shed over $2 trillion. US recession fears turned into a full-blown global crisis. But this isn't just America's story. Let's look at Canada. Why is everything so expensive in Canada right now? Home prices in Toronto tripled in 15 years. A young Canadian needs 16 years of savings just to afford an average home. The cost of living crisis there is real, and housing prices are the biggest driver. China is facing its own version. Property giant Evergrande defaulted on over $300 billion in debt. Ghost cities sit empty, built for demand that never came. Even today, 2025 data shows housing costs eating up a bigger share of paychecks worldwide. The housing bubble isn't a one-time event, it's a repeating pattern, because the forces behind it, cheap credit, speculation, and human greed, never truly disappear. Here's something most people miss. Why do companies go public during housing booms? Because inflated asset values make everything look profitable. The bubble doesn't just distort housing, it warps entire economies. Business strategy shifts from creating real value to chasing paper gains. This is where things get darker. Those who profit from bubbles rarely pay the price when they pop. Banks get bailed out. Executives collect their bonuses. Investors move their money to safe havens. So who pays the price? You, me, ordinary families, first-time buyers who got caught at the peak, hidden terms, contracts designed to confuse, misleading rates sweetened up and sold to us as affordable, trusted by people who didn't know better. They said no hidden fees. That was a lie, and housing has its own version of shrinkflation, smaller apartments, further from the city, fewer amenities, higher rent, you pay more, and get less. Signing a $500,000 mortgage contract because an agent told you this won't last. That's impulse buying at its most dangerous. Pricing psychology doesn't just apply to stores. It's a real force in real estate too, and it's designed to make you act before you think. When someone tells you property always goes up, stop for a second. In 2007, everyone was saying the exact same thing. In Spain, in Ireland, in Japan, even the day before the crash, they were still talking about it. A housing bubble isn't just a concept trapped in economics textbooks. This is your life, your rent, your savings, your future. That's why understanding this isn't a luxury, it's a necessity. This is exactly what we do on this channel. We take complex economic patterns and connect them to your everyday life. Because knowledge isn't just for knowing, it's for protecting yourself. They'll try to rush you. This deal won't last, say. Everyone's buying, you should too, they'll say. Don't act without thinking. Research, question, run your own numbers. Because the real cost of a housing bubble isn't measured in dollars. It's measured in the story of people who carried the weight of a rushed decision on their backs for years. The market will try to make you run, but sometimes the bravest move is to stop and think.